Hey everybody, welcome to Footprint Data Drive number 3. Today we're going to be talking about MEV trading and what the heck that's all about. And I'm joined here today with Brent Sitterle from bloXroute. Thanks for joining us, Brent. You want to tell us a little bit about yourself and how you got into crypto to begin with?
Yeah, thanks, Alex. Thanks for having me. And so I'm Brent. I'm the head of sales at bloXroute. And I'll get into bloXroute in a minute. But for me and how I got into crypto, it was like 2017. I heard about it, and it was just all about getting rich. And then just degened into it. Made a bunch of money,
Mm-hmm,
lost a bunch
mm-hmm.
of money.
Yeah.
Just waited for the next run and just kept doubling down. And then eventually it came, and I was able to make more than ever made in my life in 1 year, and then lost more than I ever made in my life.
Well,
And now I'm working in the industry, and it's amazing. I get paid to talk about crypto all day long and go all around the world. So it's been a dream come true. And I'm here till I die or till it goes to zero. So I've been loving it.
Sweet, yeah. And just for a little background, in case you guys listening want to know how I met Brent, I met Brent when I was down in San Francisco at a couple of meetups. We've gone to conferences together. We've done all sorts of things. Been down in San Francisco, so yeah, Brent's my boy. So I figured I'd bring him into this community sharing because MEV trading is something that's really interesting to me, and it's really super technical. So I figured, how about we dive a little bit deeper into it and just talk like what the heck is it? Let's just start there. What is MEV trading, Brent? What's
Yeah. So
MEV even stand for?
MEV originally it stood for a minor extractable value, and now it stands for maximal extractable value. And really, what it is, it's the reordering, inclusion, and exclusion of transactions within a block to extract value. So there's all kinds of tricky different things that quote unquote searchers can do. And originally this was just the miners. So one of the misconceptions about the blockchain is that it's completely immutable. And so there was this thing called the mempool, right? And the
Mm-hmm.
mempool is a place. It's like a. You could think of it as like a waiting room where pending transactions hang out before they're confirmed on the blockchain. So like every whatever the interval of time is. So for like Ethereum, it's every 12 seconds. There's a new block that shows up,
Okay.
and all those transactions that are sitting there pending to get into the next block, they get picked up and put in the next block based off how much gas they're putting. So for Ethereum, it's the block gets built based off of how much gas is being allocated towards each transaction.
Mm-hmm.
So originally it was the miners that were doing this kind of in secret, and then the kind of like the cat got out of the bag, and quote unquote these guys named searchers, they're high frequency algo traders who are operating on DeFi. So what they're doing is they're monitoring the mempool for different opportunities and triggers and then executing their algos on them. So, and the breadth of that really is like arbitrage, liquidations, front running, back running, then sandwich attacks.
Okay.
Um,
I have a question. So, is this popular on layer twos where transactions are a lot faster? Say like Arbitrum. Do you see a lot of these searchers going through mempools or anything like that?
yeah, so absolutely. MEV can show up in either layer twos or even cross chain MEV as well. A lot of it has to do with like the arbitrage is taking advantage of price inefficiencies. So if you got something that's a little bit low over here and something that's a little bit higher over there, you can create a transaction that's going to buy and sell across those at the same time.
Wow.
So
Okay, cool.
there's
And two, for anybody listening, please throw in the community chat here any questions you guys might have. Because this is going to be a little bit technical, a little bit complicated, at least for me. If it's not for you, that's awesome. But for anybody else, please throw your questions down and we'll answer them as we go here. Anyways, Brent, I guess this would be a good transition to talk about how bloXroute helps MEV traders.
yeah. So I'll jump into the story about bloXroute. And so originally, our company we started as a networking solution
Mm-hmm.
to scale blockchains to the networking layer. And what happened was is then DeFi summer popped off, and the company went, "Oh shit, DeFi traders can make a lot of fucking money if they
Hmm.
can hear about these opportunities, 3, 4, 500 milliseconds before anybody else." So the name of the game in DeFi trading is speed, and that's exactly what our solution was bringing to blockchains. And but like backing up from there, like our solution, it really does provide value to different players within the ecosystem, all the way from validators to the protocol itself to the D apps that are built on top of it. And so, for example, like we support Ethereum, BSC, Polygon, and Solana now.
Hmm.
And for Polygon, their foundation actually reached out to us to integrate us for 100% of their validators,
Wow.
um, going back to the original value prop of just speed of propagation and scaling them at the networking layer.
Mm.
So that kind of provides us a connection, direct connection to see some of this order flow as fast as possible.
Hmm.
And then like our, the breadth of our, like the backbone of our technology is a quote unquote blockchain distribution network, right? And so this BDN, as we call it, is like a CDN, if you're familiar with that, like a content distribution network.
Okay.
And the content that we're propagating is transactions and blocks faster than the peer-to-peer network. So if you're running your own node,
Hmm.
and if you're a trader in an optimal setup, you're going to be running your own node to listen to the mempool, and then you would connect to us. You could connect to us through like a cloud API or a local hosted gateway. But the gist is that 92 to 99% of transactions and blocks, depending on the blockchain, will be coming through our BDN first, anywhere from 200 to 600 milliseconds faster. So like that speed advantage provides valuable to different players in the ecosystem, but namely, it's DeFi traders who are making money and have money to pay for our solution as well.
Okay, I guess that goes right into my next question is what kind of traders, like what traders are doing this kind of, trading? What are taking advantage of this of these mempools and these taking advantages of gas fees? What kind of traders are really doing this?
So these are very sophisticated, highly advanced traders, and it can range anywhere from someone in their basement who's reeling in like $5 million a year, who's just like a little crack shop, all the way to the largest DeFi hedge funds in the world.
Hmm.
And the ones that I can talk about publicly are some of our investors like GSR, Flow Traders, and Jane Street. And some of our top customers, they're paying for our service multiple times over,
Hmm.
to get global distribution. And then I guess I'll kind of jump into something here to the differences between DeFi and TradFi. So like in traditional markets, there's like 8 or 9 major points within the world that you want to be connected to, like London, Hong Kong, Singapore, Tokyo, Chicago, New York, etc. And for DeFi, the opportunity can really come from anywhere in the world. So the importance is for these traders is to be like globally distributed so that they hear about these opportunities and act upon them faster. And that's exactly what we enable them to do.
Wow, great. Okay. And so right now, can you give us like a bit of an overview, so we know, I get Bitcoin jumped today, right? We saw a bit of a spike today. Is it due to the ordinals? I don't know, but due to, previous market conditions, I was talking about the crypto winter. How did this really affect MEV trading, or did it affect it at
Uh,
all?
that's a good question. It's the on DeFi is the TVL and volume has significantly dried up, because of the bear market, but it's been coming back. And really, like for these traders and any trader, volatility and volume create opportunity. So whenever you
Mm.
get these big spikes or these even the big dumps, there's a lot of money to be made, by extracting that value from the price inefficiencies across these exchanges.
Okay. And so you said volume is one of the major metrics that drives these traders. Is there any other metrics, footprint? Especially me, I love talking about metrics and data. So what are the main drivers, the main metrics that drive these MEV traders to make the decisions that they do?
Really, it's they're calculating different triggers within the mempool.
Mm.
So like let's say you're a user and you're gonna swap. 10,000 ETH on Uniswap. Well, if you send out your transaction and it's hanging out in the mempool, everyone's going to be able to see it. And so, in that interval of 12 seconds between blocks on Ethereum, for example, it could just be hanging out there. And then, so like, if I see your transaction for 10,000 ETH to dump it, what I could do is I could take my ETH that I already have and I can create a transaction that's going to sell it before yours by bumping up my gas fee just a little bit higher than yours.
Mm.
And so what will happen is my transaction to dump ETH will happen right before you dump a significant portion of it. And then the traders can all, like the MEV traders as well, also create a back running transaction right behind it. So, while I can sell my ETH and then you sell yours, they can also set another transaction to buy immediately after both of those transactions have occurred. And then, so there's different strategies of when to dump the bags again after the mean reversion.
Mm-hmm.
But the idea is like if you're stuck in between that sandwich, really you're getting robbed, right? So if I'm gonna set if you were the one to sell 10,000 ETH, and someone's gonna come up in there and they're gonna sell theirs first, you're gonna get worse price execution. So
Right.
it's kind of it's one of the downsides to really kind of DeFi in a way is some of these the front running bots and sandwich attacks that are out there
Mm.
because it's stealing from the user. And a lot of users don't really know that this is going on unless they're a little bit more advanced.
Yeah, I was
And
gonna ask, could this just happen to me? Let's say I wanted to do a quick dump. I had a bag, and could I get sandwich attacked with like without any prompts? Like I'd have no idea without just by someone noticing me about to do this transaction.
you'd have no clue unless you were to go into a block explorer afterwards and see what's going on in
Uh,
there. And there's a few different ways and tools that I can show you. And I'll drop some links in here in a while. But the for us, we can protect against this front running type of attack
mm-hmm.
with private transactions. And we provide this front running protection for Ethereum and BSC, and then soon for MATIC. It's one of our tools that we've offered our traders for a while. And essentially, what it is you're sending your transaction to us. We don't
Mm-hmm.
propagate it to the peer to peer network. And we send it direct. We build like for Ethereum, for example, we build the block. And then I'll get into the PBS in a little bit, but we fire it out, and the validators they don't propagate it either. So by the time when you send us a transaction, it's privately put into the next block that these front running bots don't have a chance to attack you.
Okay. Okay. Sweet. That's pretty cool. So definitely hit you up if I'm planning a quick dump, hey?
Yeah, yeah. Let me know before.
So too, I guess another question is like on average, how much are these traders making per transaction that they snipe? Are they making big gains here? Are these traders having to do this are having to execute this hundreds of times a day just to make, you know, maybe a couple $100? What kind of money are these guys making?
Well, it all really depends, right? So like it can be anywhere from like 13, 14 cents to like millions of dollars. And like it's just taking like some of these opportunities they pop up in the mempool and all these different bots are trying to fight after it. And so it's a low latency game of who can get in there and structure it and have the alpha first. But like some of these, if you look at like kind of like the like a breakdown of like the different bots and what percentage of the bots are winning these opportunities, I would venture to say like it's like give or take the top 20 bots
Hmm.
on any given chain are taking about 80% of the wins. But
Wow.
these are like very, very sophisticated math whizzes, that have figured out the game. And sometimes I regret not paying enough attention in math class. So
Yeah, the deeper I get into uh, the whole Web3 community and the further down the rabbit hole, I guess I should say, the deeper I get into the Web3 rabbit hole, yeah, definitely more. I wished I learned a lot more math and paid more attention. And I definitely
yeah.
wish I learned how to SQL at least SQL. But anyways, going forward too. Now, what kind of like obviously there's risk, right? But the way you're explaining here, Brent, it seems like there's almost no risk to get into this sort of trading.
So
But you should clarify for me what's the risk level for me? Should I just take out a big bag and start doing this, or like how? Yeah,
you need the technical expertise to get started, right? This is a lot of coding, like lower level stuff, where you're monitoring the mempool and doing high frequency algo trading. So there's a lot of alpha involved. However, that said, it's like it's anything's possible, right? The thing is that you just gotta kind of dive into it.
got you. Cool. Well, I guess that really kind of wraps up my questions on MEV trading. Anybody here listening, feel free to drop some, and we'll answer them as we go. Was there anything else you'd like to add regarding MEV, mempools, and all this fun new technical knowledge that I'm learning about today, Brent?
Yeah, so when I got my job at bloXroute about a year and a couple months ago, I had no clue, like barely any clue what the mempool was and any of this stuff. And then I went down the rabbit hole, and now I'm like deep in the game. But I'm by no means an expert. So I would implore anyone here to just start googling MEV guide, MEV this that, to kind of figure out what's going on, because this is kind of something that a lot of users really don't know that's going on, especially with the notion that blockchains are immutable. It's quasi not, at least not in the mempool. Um, if there's any, I've posted some links here in the community sharing. If anyone's got anything there, we can go forward with that.
Cool, cool. And two, you're telling me this story, and I think everyone listening will really like this. So tell me, something about Ethereum wallets, proof of work. You know what I'm getting at here?
Yeah. I know what you're getting at. So, I'll kind of jump into like the use case that we provide to NFT traders. And these are specifically or traders that are using MEV when they're going about their NFT trading. So I'll talk about two different things here. One, the last proof of work block on Ethereum was minted with our help. A user with vanity blocks, which what they're doing is they're looking to snipe different quote unquote vanity blocks like 4 3 3 2 3 2 2 4,
Yeah.
give or take. And they wanted to snipe the last proof of work block ever on Ethereum. So a couple weeks before, this guy reached out to me. We ended up helping him out, and he ended up paying 32 ETH on the gas fee, and then getting his transaction in there and securing the last block. So at the time, it was about 50 grand. And he secured the last block, and within there was only one transaction. And that one transaction is quote unquote it's an NFT, so he can change the metadata on the back end and do everything like that. But he's got a piece of history, and it was really cool that I was like, in one very very small way, it was a little part of history.
Yeah, that is
And
pretty sweet, man. That is definitely a big piece of history, man. Getting the last proof of work Ethereum block, man, and we're just at the beginning. Who knows? Going down 10 years down the line, how much hype will be behind that.
yeah, it's a piece of history at this point, so it's got some, it really made me proud when it happened. Even though I wasn't the one that secured it, I would, help them out in a very small way. Um, but
That's
then,
super cool.
but then like jumping out to like how we kind of help other NFT traders, some of like the really sophisticated NFT traders who are using MEV. One of the strategies they're doing is, basic arbitrage, where like they'll see on one exchange it's listed at this price and there's a bid offer. So they'll buy it. If it's lower, they'll buy it on one exchange and they'll sell it on another, and take the profit.
Hmm.
Another one is when a searcher is um, they're back running the mint transaction, or there's a type of transaction I believe called the flip state, which
Hmm.
is what it does is it turns on the smart contract for the mint. So like whenever whoever's like turning on the mint, they'll fire out this transaction to turn on the mint. And these guys, what they're doing is they're monitoring the mempool for this flip state transaction for this given address. And then when they identify that flip state transaction being turned on, what they'll do is they'll fire off their own transaction to mint however many NFTs right behind that flip state transaction
Hmm.
with the same amount of gas. So their transaction gets included essentially right in the front of the line as soon as the door is open.
So they can
So
snipe these bids before someone else does by leveraging the gas fee.
oh yeah, and they'll come out on top, and like everyone will like be left empty handed on the back end for this, and so like they're kind of like an alpha group in the back end, and they're looking at different like hot drops,
Hmm.
and then essentially just backgrounding these. They secure 50 of them, 100, 500, whatever it is, and they just start dumping them on people, and it's it's a money making business and zero sum game. And like if they weren't going to do it, someone else would do it. So it's just one of those things that you have to be kind of cognizant of what's happening in the mempool.
So what are like some
Um,
tips to help? So let's say I want to get a board ape. I find a good deal on a board ape, and I want to buy it. I'm going to buy it. What are some tips for me and everyone listening to avoid getting my transaction snipes, getting that board ape going to someone else? What are some
well,
tips? Should I throw more money down on the gas fees, increase my slippage, reduce my slippage? What's the tips?
so, so for if you're buying an established NFT that's already out there, it's kind of its own little use case, and you're probably not going to get front run to go and buy that NFT. However, like the only way I can see that you might get front run is like let's say you're like Franklin or some other big hot shot in the NFT space, and like you're trying to buy something, and someone has a bot that's just monitoring your wallet and trying to front run you before it, or maybe even
Mm-hmm.
like right after. Like because some of those guys they buy it and then it pumps right after because they bought it. So it's kind of different strategies. It's kind of its own use case.
Okay, got you.
There's
So
there's also
oh, go ahead.
one other thing to mention is if you have the technical know-how, what you can do is you can package up your transaction in an MEV bundle, which is a bundle of transactions that execute atomically. And if there's one transaction within that bundle that fails, then you get all of your gas back. Right. So, like, let's say there's this highly coveted mint
Hmm.
and everyone's trying to mint it, and you like the other. I think it was the other side lands one with the board apes. I was talking to a guy. They put 2 ETH as their gas, and they ended up not minting it because like everyone was just competing. It was a gas war.
Hmm.
And so they lost their 2 gas on this failed transaction. So if they were
They
to
lost
to
their
have
2 ETH.
lost their 2 ETH and they weren't able to mint it, they were left empty handed.
Wow.
Because what happened was is like they put it for the 2 ETH, and then by the time like the miners of the miners at the time included it into the next block, the contract had already been minted out. So then it fails, right? But if that transaction was to have failed, well, it was sent within an MEV bundle,
Hmm.
they would have gotten their gas back.
Ah, got you.
Oh, what you were saying like earlier, you were mentioning kind of a little bit about like what kind of risk is involved for some of these MEV traders.
Hmm.
Well, like one is like obviously the startup costs and infrastructure and the overhead, right?
Hmm.
And then being able to turn a profit on top of that. Um, but two is like these atomic transactions. If these searchers are finding an opportunity, a trigger, and they're executing a bundle,
Hmm.
it's essentially, in a way, like a zero risk trade because that trade is only going to go through if the parameters are true and it executes. And what they're doing is they're listening. These searchers that are listening into the mempool, they're taking these transactions, they're running them against their algorithms, and then if they find a trigger, they're executing on it and firing off their bundle. It's just a low latency um, kind of arms race at the end of the day.
All right. Very, very interesting. So, I guess too, I kind of want to transition into a little bit of news. We got 5 minutes before I want to wrap this up. So, My big question is, right. We just seen the SEC go after Kraken for their staking as a service, right? And what everybody's really afraid of here is them going after stable coins in DeFi. So my question is how does this affect MEV trading if, say, with everyone speculating on the collapse of DeFi stablecoins? At least I guess centralized for sure. Centralized are going to be in a heap of trouble here, but decentralized I think are fine. But what do you think about this, Brent?
I think that the government can shut the party down at any time, even though like it's decentralized. They can shut off the on ramps and off ramps, whether it be the like the crypto exchanges, and then you're going to just have to barter for coin on the side. But for specifically for like DeFi, I think they'll be going after CeFi first, is because that's kind of an easier throat to choke. But I absolutely think that they're going to be coming after DeFi in different ways, to try and regulate it and get their arms around it. Because like for them, they're ultimately, in my opinion, crypto, Bitcoin, any of it really is a direct threat to the US dollar. And if they have one of the most powerful tools in the world, the printing press of the dollar. And they're gonna, in my estimation, they're gonna do everything they can to keep that control over that tool. And like if I was in their shoes, I'd do the same thing. Um, but yeah, it's kind of just a kind of a wait and see here. I know that they're coming after these stable coins, but it will be really hard to kind of see like where that ends up in the future.
Yeah, absolutely. Now, my next question is, I touched on it right at the beginning. We saw a jump in Bitcoin today. Everybody loves that. Um, Now, do you really think, some people are saying it's because of the ordinals? Like I saw an article yesterday, some guy burned his Bored Ape forever by bridging it over to Bitcoin via the ordinals. It's essentially, the comparison was like throwing a Lamborghini in a trash compactor. Because he burnt it forever, right? You never can trade it back on Ethereum. It's on the Bitcoin chain. So, uh, what do you think about ordinals? Have you looked into ordinals much? Have you um, done any? Yeah, have you looked into ordinals? Do you know much about them?
I know the basics, that they're blowing up an NFT on Bitcoin, and it's producing a lot of volume on Bitcoin layer one itself. And it's like it might just is just observations that I have. It's kind of funny to me that like a lot of maxis have been dogging on NFTs for so long, and now they're like professing as this is like gonna be good. Um, I don't think that it's optimized for NFTs in the long run, because like you're seeing a lot of people, what they're doing is they're taking their Bitcoin NFTs and then they're wrapping them and they're selling them on an OpenSea. And so I'm just thinking like kind of a convoluted
Well, it seems a
thing, and
little
most people,
counterintuitive, right? You just put it on Bitcoin, then you wrap it so you can put it back on Ethereum.
not when your goal is to make money.
Eh.
And so that's no it's the truth is, a lot of people wouldn't be in this space if it wasn't for making money at least at one point or another. It's a lot of speculation, but I do believe in the underlying utility and use case. To bring really power to the people, with peer to peer swaps of really value without a third party intermediary. So that's there's the money aspect, but I'm also here for the tech. So
Sweet. Well, guys, we got 1 minute left, so I'm about to wrap it up. So get your questions in now if you have them, so we can answer them before the end of our show today. With that being said, Brent, is there any kind of final thoughts you'd like to hit us with, or final shills, whatever? And just give us some final thoughts before we wrap up our footprint data drive number 3. Let's go. Get me all fired up. All right.
yeah. Well, first, thank you, for hosting this and bringing me on. And then second, thank you everyone for showing up. It's been a pleasure, Alex, to share with everyone. And then, third, if anyone wants to like learn about MEV, anything more, you feel free to reach out to me. either here on Discord, or I've shared all of my information within the shared questions channel on the community calls.
Yeah, you guys don't be shy. And anyway, so I guess with that being said, I want to thank you everybody for listening once again. And this was another successful footprint data drive number 3. At one point, I'm not lying. I swear I seen 180 listeners. You guys are awesome. Thank you so much. So Brent, thanks again for joining, and I hope to have you on one of these again soon. This was a really interesting topic and actually really insightful for me. So thanks again, and everyone. Thank you. And with that, I'll say ciao for now.